When you enter a trade, you are up against banks, hedge funds, prop funds who trade with billions. So the question is, are you trading against them or are you following their footsteps? The grail in trading is to follow institutional footprints and align your trades along with the institutions. So what if you had an indicator that shows exactly where institutions are likely to buy and sell and actually before it happens? Yes, that's what I'm about to show you. But before that, I want you to understand what are supply and demand zones. What is supply and demand trading? Market moves for one reason, that is an imbalance between buyers and sellers. So when price drops fast, suddenly stops and reverses, that's not random. It's often institutional buying stepping in. Same thing happens when price rallies up, halts and reverses sharply. It is often institutional supply stepping in. So institutional buying and selling footprints form supply and demand zones. The key is to identify these zones and enter trades before the crowd sees them. So there are four formations that depict supply and demand zones. The demand zone formations are drop base rally and rally base rally, whereas the supply zone formations are rally base drop and drop base drop. So once you learn to spot these formations, you'll stop chasing price and you will start catching the origin of the move and participating along with the institutions. Everyone, I am Mahesh Kamath. I am a trading coach and a supply and demand trading specialist. Over the last few years, I have helped thousands of traders simplify their trading strategies by focusing just on one thing: trading where the big money trades. So, in this video, I will explain how supply and demand trading really works, why it gives you a massive edge over other retail traders, and how my custom built supply and demand indicator will help you find high probability trades across asset classes, whether it is forex, equity, crypto, futures, you name it, and this strategy works across asset classes. So, friends, where do traders often go wrong? So, most retail traders make the same three mistakes. So, what is it? One is they trade late breakouts that fail. Second, they rely on lagging conventional indicators. You must have heard like RSI, MACD, stochastics. These are all derivative of price, so they'll always lag price. And thirdly, they chase price and end up getting trapped. So, what is the result? They enter too late, get stopped out too often, and then eventually give up. But supply and demand flips that on its head. Instead of reacting, you position yourself along with the institution when the move is about to start. So now let's deep dive into supply and demand zone indicator and its features. So at the moment on my screen, you must be seeing this indicator. So what is this indicator? I have taken everything that I have learned from years of trading and coaching and built up a supply demand zone indicator, which does the hard work for you. This tool automatically identifies strong institutional supply and demand zones, avoids any confusion there. It provides you clear entry points and it works across all markets and time frames. So, no more drawing your zones manually, no more second guessing your trades. It is built on strict rule based logic, so it's consistent and accurate every time. So, let's see how this works now. So friends, this indicator is already applied on this chart. So let me just delete it and again apply it from the indicators tab. So under indicators, I have marked it as my favorite indicator, supply and demand zone indicator by MAK Trading School. So let me just apply it to this chart. So once I have applied this indicator, friends, you see these green zones are the demand zones identified by the indicator. To the right is the table which gives you the coordinates of the proximal and distal line of the zone. So let's go to the indicator settings. Let me open the settings window here. So here the first thing that you see under the settings is the display table. I can switch it off if I don't require the table, or if I want it, I'll just enable it. You can choose the size, whether you want it a tiny size, a large size, all that is possible. Where do you want to position this display table? To the top right is what I prefer. You have different options available. So let me just make it bottom right. So when I do bottom right, it comes down to the bottom of my screen, but I prefer it keeping it on the top right corner. The zone text color. So if you see here, DBR, RBR, DBR in brackets D. The D is for the daily time frame. The text color of the zone, again, that is customizable. You can choose any color that you prefer. So I keep it by default to the black color. So the next two settings are for showing fresh zones and displaying violated zones. So friends, in supply and demand trading, there is a lot of emphasis on freshness of the zone. So as supply demand traders, we would like to take the first entry into any fresh zone. Subsequent entries, what happens friends? The pending orders get consumed and the zone becomes a lower probability zone. So if you see here, there was a rally which was formed on 9th of Jan. Price came back to that zone on 28th of Jan and gave you a sharp move out of that zone. So 28th Jan was the first entry, first pullback into a fresh level. Then it again formed another demand zone, drop base rally. The leg out was on 29th of Jan. So you got a pullback to that zone on 27th Feb. So that zone also is tested. It came back to the zone, spent a few days here, and then again gave you a sharp reaction from this particular zone. So now these zones are tested already. So if I choose the option show only fresh zones, the tested zones will get eliminated. So now the lower base rally which was formed on 7th of Jan is still fresh. Price has never come back to this zone. So this is still showing you as a fresh level. So again I will disable that and you'll be able to see these zones which have already played out. Another feature over here is a very good backtesting feature, that is displaying violated zones. So let me enable that. So if you see here, this was a rally formed on 1st of October. Price came back. If it had gone long here, you would have got stopped out. So by this you can backtest and see. Supply would have shorted, got a small move. Supply zone again gave you a nice move. Supply zone gave you a nice move. Demand zone gave you a move out. So this is a feature where you can do the manual backtesting. So what is violation of zone? When price breaches the distal line. So what are the distal line and the proximal line? In case of a demand zone, the line on top is your proximal line. The line at the bottom is the distal line. So whenever a distal line is broken, we say that all the orders in that zone are consumed. So if I disable that, disable violated zones, so now it will not plot the zones that were there in the past. So it's a good feature for backtesting. Next you have is the colors of the zones. I like to keep it green for demand and red for supply. You can change these colors depending on the background of your chart. If you're using a black background, you may want to use some other bright colors, but I prefer to keep it green and red. The next setting is for maximum number of zones that are plotted. So friends, I like to keep this at 5. You can even reduce this or increase this. So I keep it at 5. So 5 supply and 5 demand zone that are nearest to current price. If I enable show all the zones on this chart, what happens is it will plot all the zones that are there. So the chart can get cluttered at times. You see this? So you have multiple zones that are there here. So these zones can make the chart look cluttered. So I prefer to keep it 5. You can even further reduce it to 3, 2, however you prefer. So what we are looking at the zones that are nearest to current price, because that's where we are looking to enter and exit our trades. Next is the alert parameters. So friends, when you are trading so many stocks, how do you keep a tab on where do you have zone formations? So by setting alerts, if you keep this on, you can set your alerts for whenever a new zone is formed. So under settings, you just need to go and from the alert section here, you can create an alert whenever a zone is formed, whenever a zone is violated, or whenever price enters a zone. You can set your alerts. The alerts you will get it on your email, mobile application. All those features are there in TradingView. Next is the basis for supply demand zone violation. So friends, this is high and low means trigger basis. Whenever a candle low would go below the distal line of demand, it will be violated. Whenever a candle high would go beyond the distal line of a supply zone, the zone gets violated. You can even keep this on closing basis. In too volatile conditions, sometimes what does happen is price just breaches the demand zone but does not close below. So it's safer to keep it on closing basis. You can do that. But if you're trading derivatives, your stop losses can be big. So in that case, I prefer to keep it on trigger basis, high and low basis. And Next is about the zone parameters, explosiveness of the level. So here what we are looking at is how explosive is the leg out. More explosive the leg out, more out of supply, more out of imbalance is supply and demand in that zone. Yeah. So for this explosiveness factor, I will use 1.2 on higher time frame. So your daily, weekly, monthly, or 125, 75-minute charts, I prefer keeping it 1.2. But as I go down to very small time frames, 15 minutes, 10 minutes, 5 minutes, I want more explosive levels because otherwise you'll get too many formations. So to filter out that, on smaller time frames, I can keep this at 1.5. Yeah, on higher time frames, I prefer to keep it at 1.2. And next is about number of basing candles. So friends, ideally we want to trade levels where supply and demand is out of balance. So more time that the price spends at the zone basing, that means institutions have enough time to accumulate their orders. So next time when price comes back to the zone, there is a less likelihood of having pending orders. So what is a reasonable time? So whichever time frame you are marking your zone, the maximum number of base candles that I want is 6. I don't want anything more than 6. So I'll keep it at 6. You can even reduce it down to 3, 4 depending on your preference. I like to keep it as 6. If there are more than 6 basing candles in the formation, I ideally would not like to trade that particular zone. Yeah. So these were about the features about the supply demand zone indicator and how you can use it more effectively. So let's have a look at some of the recent examples. So if you're here on the same chart, if you see, there were 3 zones in recent time. Zone 1 did not give any entry. Zone 2, where my cursor is, you see the price pulled back on 28th of Jan. Let me just change it to the highlighter. Yeah. So here, on this candle, price came back to the zone, gave you a nice move out. Another zone formed, price came back on 27th of Feb, again gave you a nice move out. So the key to supply demand trading, friends, is you take small risks to make big gains. So whenever you see these zones give you explosive move outs, ideally reward to risk ratios beyond 3:1. The bare minimum that I look at for is 2:1. If the trade is not offering me 2:1, I would not like to treat the trade. That's the bare minimum cutoff. But ideally, reward to risk beyond 3:1 is what you can get with this trading strategy. So recently there were a couple of short examples also, short trades which are identified by the indicator. One was Wipro, daily chart. So Wipro, if you see, there was a demand zone formed, a supply zone formed here, a drop-based drop level. Price retraced back to supply on 6th of March and you had a sharp move out of that. Price has fallen down sharply. You will never be able to catch this entire move. Depending on your trade management technique, you will exit this trade basis on your trailing stop loss. So there is a completely separate video which I have covered on trailing stop losses. You can go through that as well. Different methods how you can trail your stop losses. But if you see here, sharp move. Immediately when price reaches supply, reacts sharply, gives you a nice move if you are a short trader. Recently now new supply zone formed, price has come back to supply and is now reacting sharply from your supply level. Another short trade example was Trent. Trent, supply zone formed here somewhere in Jan, price retraced, sharp move out. Another zone formed here, rally based drop, price did not retrace back to rally based drop. But on the way down, it formed a drop based drop level. Price came back here, next day a down move. And now because of the tariff news, you had the gap down. So with the gap down, you've got your targets done. So excellent move out from this supply zone. So the key is to identify high probability supply and demand zones. So friends, it's a very simple strategy and the power is of knowing where smart money is likely to act. So what this zone does for you, it identifies institutional footprints where institutions are likely to participate again. So what do you have to do as a retail trader? Align yourself along with the institution, participate in the trade along with the institution, which increases the probability of trade working in your favor. It works on any time frame, any asset class, whether you are scalping, day trading, swing trading or positional trading, this strategy would work. Only thing that would change is your time frame depending upon your trading style. So friends, traders using this tool are seeing real results. They are getting crisp, clear entries, fewer false signals, and most importantly, more consistent profits. So here are a few messages and screenshots from traders who have used it successfully. And as you can see, the results speak for themselves. So now you might be wondering, is this really worth it? So friends, what I would say is, what's the cost of another bad trade? Another missed opportunity? Another sleepless night second guessing your entries and exits into trades? This indicator gives you a real professional edge, the kind of edge that makes trading simple, logical, and most importantly, stress free. It's not magic, it's just a smarter way to trade. So, if you're ready to stop guessing and start trading with confidence, just click the link in the description below and get instant access to the supply and demand zone indicator. Friends, it's time to trade like the pros and not like the herd. So I hope you found this video valuable, and if you did, don't forget to like this video, subscribe and hit the bell icon so you never miss a strategy breakdown or a trade analysis video. And also do leave a comment below if you want me to do a trade planning session using this indicator, or if you have any questions pertaining to this supply and demand zone indicator or supply and demand trading in general. So friends, thank you for watching and I'll see you in the next video.